Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, welcome to another great episode of We Build Great Apartment Communities, the only place where you come to learn how to take apartment buildings and turn them into amazing communities. Today, we have a very special guest and also a very special topic. So I know a lot of you have been messaging me wanting to know a little bit more about land because of how the market's shifting. More folks are willing to take on more developmental risk because the upside, I think, is there, right? And anytime you have rising land prices, usually a good opportunity to start looking at development, and in many cases taking on that additional risk because we get rewarded for it. So today I have someone here to help demystify land investing, and Mark is the Yoda of land investments. So we're going to get into this, a very great topic here. Very happy to have Mark Podolsky here with us today, and we're going to get into a lot of topics around land. And also, this is going to be a great opportunity for me to address a lot of the questions that I've been getting over the last, I want to say, about 3 to 4 months, wanting to learn a little bit more about land investing. So the craving is going to be satisfied as of today with Mark. So, hey, Mark, welcome to the show, man.
John Brackett, thanks so much for having me. I appreciate it.
You're very welcome, buddy. You're very welcome. Okay, so let me first of all just give our audience a quick background. They already know that you're the land Yoda. Okay, so let me just add some context to the land Yoda, right? So armed with only $3,000, some gut-wrenching fear, and absolutely no real estate experience, Mark bought his first few parcels of raw land in 2001. So since then, he's the author of Dirt Rich, the ultimate guide to helping you build a passive income, and owner of Frontier Properties, a very reputable and successful land investment company, and has been buying and selling land full-time since 2001. So by focusing on working smart, not hard, he has completed over 5,500 land deals with an average ROI of about 300% on cash flips and over 1,000% on deals he sells with financing terms. So, man, you're at the right place. You're at the right corner to share some of the wealth with information, right? So that we can learn a little bit more about how you're driving some of those amazing returns. So with that being said, man, Mark, welcome to the show. Thanks for being here, bud.
John, thank you so much. And yeah, I wish we were making 100,000% returns. But I think 1,000 will do it.
1,000 is pretty good, right? 1,000 is pretty darn good. So, hey, man, I know I shared your background really quickly. How in the world did you get into land investing?
So if we rewind the tape to 2000, 22 years ago, I was a miserable, micromanaged, 45-minute commute to work and back investment banker, specializing in mergers and acquisitions with private equity groups. And John, it got so bad for me, I wouldn't get the Sunday blues, anticipating Monday coming. I'd get the Friday blues, anticipating the weekend going by really fast and having to be back at work on Monday. It's terrible.
That's bad.
So my firm hires this guy. He's telling me that as a side hustle, he's buying up raw land, pennies on the dollar at tax deed auctions. He's flipping them online and he's making a 300% return on his money. And I'm looking at companies all day long, and great company, great. 15% EBITDA margins or free cash flow. Right. Average companies, 10%. I'm looking at companies all day long, less than 10%. So of course, I don't believe him. So we go to New Mexico. I got $3,000 saved up for car repairs. I do exactly what he tells me to do. I buy 10 half-acre parcels, an average price of $300 each. I flip them online, and they all sell for an average price of $1,200 each. It worked. Huh? So I took all that money. I went to another auction, and this is where I live in Arizona. Again, it's 2000. There's no one in the room. Right. I'm buying up lots, acreage for nothing. And I sell all that land, and I made over $90,000 cash. So I go to my wife. I said, honey, I'm going to quit my job and become a full-time land investor. She's pregnant.
Oh, I know how that feels, man. I've been there.
So she's like, absolutely not. So I said, okay. So it took me about 18 months for the land investing income to exceed the investment banking income. And then I quit, and I've been doing it full-time ever since. And I love it.
That's awesome, man. That's awesome. Well, so hey, I have a lot of questions. Let's start off with your investment banking background, right? Because you're an investment banker. In this case, sounds like you were analyzing. Were you doing most of the analysis or were you actually putting together the deal?
I
Selling
was
the deal.
actually bringing the deals in.
Oh, you're
So
bringing the deals in. You're selling them in.
right. Yeah. So I was more on the sales side of it.
Okay.
And, I'd look at the P&L, the balance sheet, and kind of do the add backs and do all that. But I wasn't really putting the deal together. The private equity group
Right.
was putting the deal together. I was sort of the middleman and all that.
I get it. I get it, man. I get it. I get it. We have very similar backgrounds. So let's talk a little bit about the three main skills that you felt you were able to develop as an investment banker. And now, granted, I'm sure you had some academic background before that added to that. But when you're out there selling and you're putting together deals, usually you either develop skills that you don't already have or you enhance them. So what do you think were the three greatest skills that you had when you actually left your firm to start land banking?
Well, I definitely think selling was number one, negotiating, and then analyzing a deal and spreadsheeting out, looking at pro formas and just understanding the numbers and how that would all work.
Right, right. Okay, so those are three great skills, right? So sales,
Negotiating,
negotiating, and analyzing numbers.
right?
Okay, great. So I'm sure we're going to see how all that fits in, but that's why I started off with that question. So now, fast forward, man, you talked about you had a couple deals that you put together. You built up a little war chest of $90,000, and then you were able to repeat that, right? So before we get into that, why do you feel land banking is maybe an undervalued area of investment? And why do you feel it's as profitable, at least as you've been able to make it?
I'll tell you what, I'm going to walk you through it, John.
Let's
And
do it.
I'm going to make the argument that I have the best passive income model. And if you disagree, we'll get into it.
All right, let's do this, man. So let's do
All
it.
right. So, John, where do you live?
I live in San Diego.
Okay. Well, poor guy. Okay. You've lost all complaining privileges, but that's a whole other podcast. Anyways, so you're in California, and I'm going to assume that you own 5 acres of raw land in Arizona, where I live.
Okay.
But you owe $200 in back taxes. So essentially, you're advertising two important things to me. Number one, you have no emotional attachment to the raw land. You're in California, properties in Arizona. And number two, you're financially distressed in some weird way. Because when we don't pay for things like our property taxes, we don't value them in the same way. As a result, the county treasurer keeps sending you notices saying, John, if you don't pay your property taxes, you're going to lose this property to a tax lien or a tax deed investor. So all I'm going to do is look at the comparable sales the last 12 to 18 months on your 5-acre parcel. I'm going to take the lowest comparable sale. I'm going to divide by 4. And that's going to get me what Warren Buffett would call a 300% margin of safety. So I'm going to send you an actual offer on your 5-acre parcel. So easy numbers, lowest comparable sales, 10,000. I'm going to send you an offer for $2,500. Now you accept it because for you, $2,500 is better than nothing. In reality, 3 to 5% of people accept my quote unquote top dollar offer. But now that you've accepted it, I have to go through due diligence or in-depth research. I have to confirm you still own the property. I have to make sure that back taxes are only $200. I have to make sure there's no breaks in the chain of title. There's no liens or encumbrances.
Sure.
I want to know what's the restrictions with planning and zoning, ingress and egress, legal access. I have this whole long checklist that I look for in due diligence. Outsource that to my team in the Philippines. I'll pay $11. They're connected to an American title company. Let's say everything checks out. I'm going to send you a check for $2,300. I'm going to send a check for $200 to the county treasurer. I own it free and clear. And now I'm going to sell it 30 days or less. And I'm going to make a cash flow. So I have a built-in best buyer. Do you know who it is?
Built-in best buyer. Let's see. Built-in best buyer would be your students.
No.
Okay, built-in best buyer.
My students are learning how to buy property 25 cents of the dollar. They're not going to buy it from me. I'm going to sell it retail.
Tax deed investors.
No, but that's a good guess.
Okay, so who is it?
The neighbors the
Oh,
neighbors.
got it. Yeah, yeah,
So,
absolutely.
so I'm going to send out neighbor letters saying, hey, here's your opportunity, protect your privacy, protect your views, know your neighbor. So oftentimes the neighbors will buy it. Now, if they pass, I'll go to my buyers list. My buyers list passes, I'll go to a little website you may have never heard of called Craigslist, 10th most trafficked website in the United States. I'll go to one I know you've heard of called Meta. It's the Facebook buy sell groups, the marketplace. And then I'm going to go to the lands, landmodo.com, landandfarm.com, landsofamerica.com, landflip.com, landhub.com. These are platforms where people buy and sell raw land every day. But the way that I do it is where the magic happens.
Man,
So
bring us the magic. Bring us the magic, Mark.
Here's the magic. All I'm going to ask for somebody else to own your 5-acre parcel is a $2,500 down payment. And then I'm going to make it a car payment, $339 a month, 9% interest for the next 84 months. So it's a one-time sale. I get my money out on the down payment. I could go 6 to 10 months out. And then I'm going to get $339 a month and 9% interest for the next 84 months. John, no renters, no rehabs, no renovations, no rodents. And because I'm not dealing with a tenant, I'm exempt from Dodd-Frank, RESPA, and the SAFE Act, owner's real estate legislation. So it's a simple game I play. Can I create enough land notes where my passive income exceeds my fixed expenses? And then I'm working because I want to, not because I have to. My question is, do I have the best passive income model?
I don't know yet. Let's find out. So let me ask you some questions. Okay. Don't know the answer to that yet, but we're going to find out. We're going to find out. Your investment banking background to work, Mark. We're going to put it to work, man. So let me ask you a couple of questions, okay? When you're going through this process of analysis, you brought up a couple of things that you outsource it. You identify an opportunity, you outsource it to your team in the Philippines. So walk us through the value of that team and what they do for you to make you want to refer that out to them, right? What is the value of you outsourcing to your team?
Well, essentially, the last thing anyone wants to do is build another job for themselves. Okay. So I can always make more money, but I can't get more time. So I'm using 3 points of leverage in my business: other people's time, other people's money, and software. So everywhere along that, like 5 main areas I discussed of deal flow and marketing and sales, I'm actually using a team member in there. So the first piece is going to be, really county research.
Yeah. So you know what, man, I really appreciate you saying that. So here's what I'm going to take some notes because we're going to dissect this thing and find the money in your model. Okay. And then I'll be able to answer your questions. Do you have the best model? Yes or no? All right. Okay. So go ahead, Mark.
Okay. So we're going to have a team member handle the county research. So basically there's 3,007 US counties. Where do you start? I mean, John, let's face it. Nobody wakes up and thinks to themselves, boy, I'd like some raw land in Iowa today, unless you live in Iowa.
Right.
So we want to go to the Sunshine States, California, Nevada, Texas, Arizona, New Mexico, Colorado, Washington, Oregon, Florida, right? These are fast growing states that have an abundance of inexpensive raw land. So that's kind of where we're going to start. Now, where do I go to do that? Well, I'll go to a website like landmodo.com because I want to see what the other land investors are selling. I want to know definitively I have a market. So imagine we're on a lake together and we see 20 boats on one side of the bank and they're all catching fish. And we see 2 other boats on the other side of the bank and they're not catching fish. We have to decide, do we want to go where there's less competition for fish or where everybody's catching fish? What do you think?
It really depends. I think it would depend. But so let me qualify that question a little bit further, okay? Are you looking for a market or are you trying to price the opportunities that you're identifying? Because there's a difference.
I'm looking for a market. I want to know there's a market.
Okay, so when you're looking for a market and you've identified what people are buying, selling, right? What's in demand, your marketing efforts towards that type of product or that type of land.
Right. But I want to go where everyone's catching fish. I want to go where there's a strong market, right? So I want to know that's where I'm going to go.
You're saying that you want to go where everyone's buying land.
right? Where everyone's selling land and buying land.
Okay, where there's a
Right.
market. I get it. I get it.
A really vibrant market. Now, remember, there's billions of
Where
acres of
there,
land
where there, okay,
available.
so for our audience, where land is trading, right?
Land is trading, right? And
Land is actively trading. Yeah, actively
right.
trading.
And you've got to
So,
remember, this is not a competitive industry, right? Because there's nothing more boring. You're not going to go to HGTV or the DIY network and see flip this land. The before picture is raw land. The after picture is raw land, right? So if you go to a real estate investment association meeting, a RIA meeting, 100 people in the room, 99 of them are landlords,
that's pretty funny, man.
flippers, and wholesalers. You and I would be the only land guys there. So essentially, there's billions of acres of land available. There's no big money. There's no private equity groups. There's no hedge funds. So a million people could be in this niche. We're all going to run out of money before we run out of deal flow. And again, how do I know that? Because when I started teaching this, my wife said to me, why on earth would you want to teach anyone this? You're going to create your own competition. So I put on my investment banker hat. How big is the market? That's the first question any private equity group asks.
Right. Right.
They do anything. How big is the market? So when you analyze it, it's massive. So that's the first thing we want to do is our county research. Then we need to get the list. So getting the list, you're going to go to a website called NACO.org, NACO.org.
Okay, Mark, so let me pause for a little bit because you talk about identifying the market, which, right, we all do. We all want to identify a market, make sure that there are trades happening in that market. There's demand, so we can figure out how to direct our time and energy to find deals, right? Okay.
Right.
Now, in doing so, how are you quantifying the market? How are you saying, okay, there's adequate demand here for me to be able to spend my time and energy? Is it 1,000 trades a month, 2,000 trades a month, 10,000 a year? How are you making that assessment?
Well, I want to do a deal a day, essentially. So that's really what I want to do. The question is, that's just, my goal. If you want to do more than that, you can. But for me, I'm happy doing that. So to do a deal a day, if we just do some numbers and I'm getting a 3 to 5% response rate, and maybe I'm getting a 1% close rate. So I got to maybe mail 36,000 offers
A
in
month?
a year. In a year. Right. To get that.
365. Yeah. Yeah.
Yeah. So that's what I'm kind of reverse engineering, if in a way. So where can I find that much land? Well, Harris County, Texas has that much just in one county.
Right.
So it just depends on where you want to go, how much your budget is.
Where do you buy and sell the majority of the parcels?
I mean, we have land everywhere. So I've got a lot of land everywhere. We've got a lot of land. I don't even know, honestly.
That sounds like Harris County, man, is one of those little nuggets, huh?
It might be. I mean, it's a big county, but there's lots of counties like that. So you want to make sure that there's enough land. You don't want to go to a county that has no parcels of land. You also don't want to go to San Francisco or New York City or San Diego and do infill lots. If I have an infill lot in San Diego, well, I'm not going to sell it to you for 25 cents on the dollar. I'm going to go to the biggest, baddest land broker in town. So we want to be an hour to 3 hours outside of the nearest city and look at that rural land in these inefficient markets.
Yeah. Okay. So talk about that, right? Because that's really a big one. You talk about inefficient markets. Can you just elaborate on that and what that means for our audience?
So an inefficient market essentially means that you and I both don't know the price of or the value of the piece of raw land. So an efficient market, I can go and look at John's house on Zillow.com, and I'm going to have a really good, clear idea of what that house is worth. That's an efficient market. An inefficient market means that it's really what a buyer and a seller agree to, because we both don't really understand or know what the true value is. It's just what we agree to, because the comparables are all over the place on raw land.
Okay. And so you say you want to go and find these inefficient markets. So how are you doing that, right? So you talk about, hey, I need to make sure that there's demand for me to be able to spend my time and energy. And the next thing you do is, okay, now I want to spend my time operating in inefficient markets, right? Because there's going to be more opportunity when you do that, because there's greater variability in price, consequently more opportunity, right? So
Correct.
you identifying inefficient markets, how?
Well, again, it's going to be rural land an hour to 3 hours outside of the city
Okay.
because this is land that is rural. That hasn't been developed.
Sure.
So we don't really have great comps on it. And we don't know when development's going to occur.
Okay. So let me clarify a couple things, right? Because high demand markets and tertiary markets that you just described, right? Those are kind of oxymorons, right? Because there aren't a lot of trades happening, but in that region, what you're really saying is, hey, I want to find markets like Harris County, for example, where there's an abundance of land, where there are enough parcels where I know that these parcels are going to trade, right? There are enough parcels for me to send out 50,000 mailers a year and, be able to generate enough business. In other words, if you need to send out 50,000 mails a year to close roughly 300 deals a year, you don't go to a market where you only have like 10,000 parcels or 5,000 parcels, right? Doesn't equate.
Well, you could. It's just that now you got to go to another market.
Sure, you have to expand into another market till you hit your target number, and then I get it, reverse engineer into that. So Mark, ultimately, it sounds like where the magic is for you is in these rural markets where you just have less comparable sales, right? Not as efficient. You don't have a lot of trades on an ongoing basis, and that's what creates inefficiency. If you had a lot of trades, the market would be considered fairly efficient because you can find the data to support what prices the lots are selling for. But effectively, you can't have a lot of trades, right? Because that's what creates the inefficiency and, of course, the variability in price, correct?
Exactly.
Okay, perfect.
Exactly.
Perfect. So we're talking about rural land in rural USA.
Right.
Okay, beautiful, man. Let's advance.
Okay. So where are we at now?
All right. So we talked about analysis, sunshine states, looking for markets where you have enough lots to support whatever your annual sales target is. And then you talked about inefficient markets, rural markets, right? Rural land, less trades, inefficiency.
You got it. You got it. So from there, once we have our market, we're just going to get the comparable sales, the lowest comparable sale, divide by 4. We're going to put that into our spreadsheet. And then we're going to upload that into our software called lgpass.com, which automates the process. And then we're going to look at our response rate. So if our offers come back unaccepted under 3%, we know we came in too low for that market. If it came in over 5%, we got to get nervous. We came in too high. We have to do what I call retrade or renegotiate during due diligence. Which is better? It depends on you. If you're working a full-time job and you're doing this as a side hustle, better to go in low because we don't want to be in the negotiating business. But if you've got time, maybe you want to go in high and you have time to renegotiate, or if you want to hire an intake manager, which is what I do, that is their job, is to essentially qualify the sellers, make sure they're not just responding just to yell at me, and make sure they really want to sell, walk them through the process. And if we have to renegotiate.
Okay, beautiful. So let's talk a little bit about qualified prospects, because that's a big one, right? I mean, no one wants to send out $30,000, $40,000 of mailers a year to prospects that have a high probability of not doing business with us, right? So let's talk about the triggers that you look for to determine if a prospect is going to be, if a lead has a high probability of raising their hand and saying, yes, I would like to sell. So what does that look like? Tax sales, liens, what does that look like?
If I've got a strong market, I'm mailing out to all of them because our margins are so high at 300 to 1,000%. It's really an investment. It's not an expense. So if I know my numbers are right and I've got a 1% close rate, then it's very profitable at any level if I've got a strong market.
You're just blanketing the market with.
I'm blanketing the market and I'm showing up every 90 to 120 days if I can continue doing deals there. Okay. And there's a strong market.
Okay. So is there something in your letter that would create a stronger interest in someone saying, yes, I'd like to consider doing business with you? Or are they just.
No, it's so generic. It's silly. It says, I'd like to buy your offer at this. I'd like to buy your property at this price. And then we have a little bit of legalese that says, contingent upon.
Okay.
due diligence and back taxes.
All
And that's
right.
it. It's an actual offer.
Okay, understood. It's an actual
Yeah.
offer. All right, so you talked about automating your offer process. What software did you say you're using?
It's called lgpass.com, Land
Okay.
Geek proprietary automated software system.
Did you create that, or is that a third party?
Yeah, no, we created it.
You created it. Okay. So automating the offer process.
Well, that software actually automates the entire business, from essentially your offer to marketing to sales to contracts, because we use a purchase sale agreement, a promissory note, and a land sale contract. So what used to take 20 minutes of paperwork now takes 1 second to do.
Okay. Okay. How much time do you think that saves you?
I work about 30 minutes a week in Frontier Properties, the land investing business. So it saves tons of time.
And then outside of that business, do you have other businesses that you're managing, operating?
I have Land Geek, which teaches a training business. So I go on podcasts like this and talk about helping people get out of what I call sole economic dependency,
Okay.
and then teaching them the business. But
Okay, beautiful, Mark. So what is the average ticket sale, man? Average price per lot, roughly, when it comes to,
there really isn't an average. I'd say that, let's just say $5,000 today. It's probably
okay,
on
so it's
average.
roughly 5,000, right? All right, so you're finding something that's roughly 20 grand, dividing it by 4 or 3. So in this case, it's 15 divided by 3. You're buying at 5, and there's your margin right there, right? So
Right.
you're making, in this case, roughly what, about $10,000 per transaction, somewhere in there?
Well, it's going to be more than that because we do owner financing. Because time value of money,
Sure.
we're getting a
Sure.
higher margin. But
And
for
then-
cash, if we do a cash deal, it's about 300% margin.
Okay, and then what percent are you financing versus cash?
95% is financing, 5%
Okay.
is cash.
And then, man, why did you use the 399 number?
I want to make it a car payment. If you got a job, you can afford this land. So I want the biggest buyer pool as possible.
All right. So the 399 number has nothing to do with your price. It really has more to do with expanding your buyer pool and marketing.
Exactly.
Okay, beautiful, man. I love it. I love it. So we're narrowing down the funnel, Mark, to be able to answer your question. Do I have the best passive cash flow business out there? We don't know yet, Mark. I don't know yet, man, but we're getting close. We're getting close. So here's what I do know so far. Okay. What I do know so far is you've been able to automate your process. Okay. You've been able to automate how you identify opportunity, how you underwrite it or analyze it, how you make offers. We haven't got into the marketing yet. So, but I'm sure that's going to be a big one, right? Because if you don't have leads coming in, everything else kind of falls apart and falls down.
Right.
You've been able to automate making offers. So how have you automated making decisions? Who's doing the underwriting and who's decisioning the land for sales or for
So we have an acquisition manager that manages that piece.
Okay, great. So you do have employees that you've put in place to run this operation.
Oh, correct. Yeah.
Okay, so
Absolutely.
It's a business with employees. You build out a system, you put people in place to manage the process, right?
Mm-hmm.
Okay, for profit.
Mm-hmm.
Okay, beautiful. Okay, man. So I think I'm understanding this, and the mud is turning into light, clear water, Mark.
Okay.
So now you have financing that you attach to this. You're financing roughly 90%. Are you taking these notes out roughly? I think you said 80 months or 84 months. So on average, 5 years, 6 years.
Yeah, let's say 6 years on average.
Okay. And do these notes typically go full term, or do they get paid off in a year or 2 years?
No, they go full term, but about 10% default.
Okay.
So then when they default, we're going to get a new down payment, new
Okay.
monthly payments, and extend out our ROI.
Okay. So when they go full term, are they coming back to you and asking for a refinance, or are they actually paying you off?
Well, when they go full term, they pay off their promissory note, and then they own the property for 8
Okay.
years.
So they actually are paying it off, principal and interest. It's not a balloon.
Oh no, yeah, they're paying it off.
Okay, great, man. So you're getting paid principal and interest to maturity, or in this case, to pay off. And they get their deed, and you move on, and everybody's happy.
Everyone's happy.
Okay, awesome. And so, how are you managing all these notes? Are you outsourcing that to a third party? Do you have someone that you've hired internally?
It's called geekpay.io. It's a set it and forget it payment system.
I like
So
it.
yeah. So we collect our down payment via credit card, and then we set up recurring payments via ACH. It does all the notifications. It does all the math. And the borrower can self-serve, so they can log in, see what their current balance is. They can make a prepayment if they want. Again, I can always make more money. Can't get more time.
Right.
So this really is amazing, amazing program.
And so how long did it take you to create the software, the note software, and then also your, in this case, your office?
OG Pass. Yeah. So software is kind of like a baby. It almost, it grows up, but it
Right.
costs a lot of money to keep that baby growing.
Of course. You still have to nurture the baby, right, man?
Still got to nurture it. Yeah.
Do you have kids?
I have 3.
Okay,
Yeah.
so just like kids, you still, you still gotta nurture them, put them through school, through college. When they get out, right, you still gotta nurture them some more until they're on their own. And then you're still taking care of them.
Exactly. And you're still taking care of them. You're still worried about them for sure.
You're still worried. You're always gonna worry as a parent, man. So Mark, this has been really great, but I really appreciate you letting me ask these questions and kind of work through your system. So if you had to point to one reason why you love what you do and you feel that it's the best business out there, what would that be?
Well, I think it's the ultimate subscription model in the sense that it's a one-time sale. You get recurring payments every single month, and you're just shuffling paper and making money. I don't have to deal with anything physical. There's nothing to protect. It's an asset that lasts forever. It's a legacy asset. There's a lust for land in this country. So it's got a huge market, huge demand. So for me, because I have no business actually even owning a home, the fact that I can systematize this really appeals to me. And why I love it so much is that, as far as like the teaching piece of it, is that nobody ever called me or wrote me and said, Mark, that land transaction changed my life. But now that we're helping people get out of what I call solo economic dependency, their passive income exceeding their fixed expenses, and they have total freedom to do whatever they want. They're quitting their jobs, their spouse is quitting their jobs. They're spending more time with their families. They're spending more time traveling. They're moving up Maslow's hierarchy of needs into self-actualization and really doing what they really want to do in life. And they're stopping trading dollars for hours.
Okay, cool, man. So how many transactions have you found that, whether it be a student or one of your clients, however you want to term that, has to have or complete to get them to that break-even point that you talk about, right? Well, really income exceeding their expenses. I mean, not really breaking even, but exceeding.
I mean, if you're in San Diego, it's going to be a bigger number than if you're in Sioux City.
But let's use your numbers. Is it, you have to close 200 deals, 300 deals for you to get to that place?
I mean, I like to say if the average note's $200 a month, let's say, you got to just do 50 deals, you're at 10,000 a month. Average
note is $200 a month. You got to do, you said 50 deals to get to 10,000 a month, right?
Right.
Oh, $200 a month in payment.
In payment, right. So you get $10,000 a month of passive income. For most people, that will get you, free.
Okay. Because land's owned free and clear, right? You're buying the land free and clear. So you're right. So principal and interest coming in, right? Full cash flow.
Right.
I like it. Okay, great, man. So Mark, I really appreciate you being on, but we're winding down this show. Now we're towards the end of our show. So now let me see if I can answer this question, okay? I think here's my response. I think, man, you have built an incredible business. I love the note model, especially when you can go out to term on that. In this case, roughly 6-7 years in many cases. So you're generating 90% of your deals are financed. So you're generating a combination of principal and interest, right? Which is great. And you're doing that over an extended period. So you're building a business with reoccurring cash flow. And that's the name of the game. I mean, as a banker, man, you know that.
Right. And I don't have to go and use, a third-party bank. I don't have to get private money. I don't have to go through the brain damage of analyzing, these multi-million-dollar multifamily deals.
Right.
It's simple.
So here's my response. Man, I think you built a great business. I love the components of cash and then also cash flow, really reoccurring cash flow. There's a huge difference. but you still have to feed the engine, right, to keep the engine producing.
Yeah, absolutely.
So when it's all said and done, marketing is a very valuable component of your business. And I'm sure you throw a lot of money at marketing to be able to keep the engine running, right?
No,
Okay, so you don't,
because we're using
market?
free platforms.
You don't market, or you don't throw a lot of money at marketing?
We don't throw a lot of money at it because we don't have to do paid traffic.
Okay.
So we use inexpensive virtual assistants who can copy and paste performing ads. And then that's why we're going to places that have already created the traffic, like a Facebook or a Craigslist. And even Landmodo, they have a free account. I would recommend you would use that, but it's very inexpensive to market raw land.
Okay, cool. You built a business where you're targeting land leads. You have a really good system to generate these leads and bring these leads in. You built out a system for automating your offer process, right? You have employees in place to negotiate the deals when they're qualified. Okay, so when they're qualified, and then where does the Philippines come in? And you said something about $11.
They're connected to an American title company. They do our due diligence. Now, if we're spending more than $5,000 on the transaction, we will close traditionally with a title company.
So are they, okay, so it's $11 per transaction to run
$11
title.
per transaction.
To run
Right.
title. Are they insuring that as well with a US-based company, or how are they doing that?
No, just to get our due diligence done.
Okay,
So
got it.
you accept the offer. Let's get our due diligence report and make sure we want to buy that property.
Okay, so you're paying them $11 per transaction to complete due diligence per your checklist, probably, for a transaction.
Correct.
Okay, great. Okay, makes total sense, man. Makes total sense. So once the due diligence is done, you get a red light, green light. At that point, probably your acquisition manager, your sales manager comes in and they start negotiating, right? Negotiate terms, or they offer terms. Terms are accepted usually 90% of the time, right? And so now you start building this recurring cash flow stream based predominantly off of notes.
Correct.
Okay, beautiful, man. I like it. So yeah, I think it's a great business. I think you built a great business. I don't know if I would call it the best, but I think you built a really good business. Here's where I see the opportunity, okay? The opportunity that I see is the barriers to entry very low, but the barriers to entry very high if you want to build something that you don't have to be in and manage, right? Because you have to pay for the systems, the technology, the know-how. You have to pay for all of that stuff. And on top of all that, Mark, you have to hire people to run that for you. And you have to build a skill set to manage people, right? I mean, people don't just wake up one morning and they perform. People don't just wake up one morning and be like geniuses. Okay, let me step into this business that you built and I'm going to just do it the way that you do it without any training. Life doesn't work that way. So yeah, you built a phenomenal business, but it is a business and it needs to be nurtured and you need to have people in place to operate it. But if you can do that and you're good with that, it's good. It's good, man. It's good. I give you the
So yeah, it's definitely a business for sure.
It is. It is.
And yeah, I mean, it's a simple model, but to your point, like nothing is easy. Nothing worth doing is easy.
Not one thing, man. But what you have done, though, man, I got to give you 2 high fives, man. I think it's smart, man. You get
Thank
it.
you.
Beautiful, Mark. Well, Mark, you've been a tremendous guest, man. And man, I want to wish you continued success. I think you built out a very well-oiled machine. So you get the green cash flow endorsement from me, man. In fact, let me change that. The evergreen endorsement from me.
All right.
And that is the money that keeps on reoccurring, right?
That's exactly. That's the name of the game.
You know about the evergreen, Mark. You know about the evergreen, man.
Yeah, absolutely. I mean, it's so funny because everything I do is evergreen.
Yeah.
Which is why I podcast, because it's a one-time record and then it's evergreen. But
Yeah.
I'll see people who will go on live streams and, constantly, like I remember, people are like, oh, why don't you do Clubhouse? I'm like, well, I can't record it. Why would I do that? It's not evergreen. Or Periscope back in the day.
I like it, man.
So if it's not evergreen, I don't want to do it.
Not a good use of time and money. I get it. I totally get it.
Yeah.
Well, Mark, you've been a tremendous guest, man. And I just want to thank you for role playing everybody through this process, because I think the fact that you've done that, for one, I think it's really opened people up to what you've built. Probably going to make a lot of people a lot more comfortable reaching out to you to learn a little bit more. And the other side of that too, though, it's also given our audience another venue or another avenue through which they can make investment, right? In this case, it's land. But I think what you've exposed over and above everything else is how to create something like this, or how to acquire land on a consistent basis with very little risk, right? I think that's really the opportunity, man. So for that, Mark, you've been awesome, man, as a guest. Really want to thank you. With that being said, I know I've been asking you questions now for literally almost an hour. What is the one question, Mark, that you have of me that you think can add some value to our audience, man?
I'd ask you, if you were on a desert island and you could only bring one book, and when you got off that island, you were fairly confident, or you're 100% confident, that with the knowledge from that book, you would be better in life, in business, in everything. What book would you recommend?
That's a really, really interesting question. A book that I would be better in life after I read, once I jumped off of an island, right?
Once you jumped off an island, you're like, with this knowledge.
I think there are a lot of books like this, but for the purposes of this discussion, I think Think and Grow Rich, right, by Napoleon Hill. And the reason for that, number one, it's the first book out there of its kind where it talks about mindset. And it all started with that book. But I really believe that when you have that kind of time and space, it's very difficult to break through a new threshold if you don't have the mindset to do it. And it's very, very difficult. And those thresholds, they come in many different forms. But when you have that kind of time, that kind of space, I think there are a couple things that will be really important is reshaping how you think, right? You got to change how you think to be able to achieve new things. Right? I mean, Einstein was really good with that concept, right? If the only way to throw an object off its course is you have to hit it somehow, right? You have to move it off its course. And another way of saying that is if we keep thinking the same way over and over again, we just continue to be stuck where we are, right? So the only way to move beyond that is you have to change your way of thinking. So that's why I think that book would be great. The other side of that too is you can change your way of thinking, but then you have to take action. Otherwise, you become a really good thinker, but without being able to turn that thought into an actionable idea, totally useless. That book teaches you how to do both, man. And it's a fantastic book. You got to be able to do both. You got to be able to take a good idea or just an idea and convert it into an actionable plan that you can execute on or bring other people to execute on. But I think those two things are really important.
Awesome.
Yeah, man. Awesome. Mark, thanks so much, man. I really enjoyed speaking with you, man. You are a stud. Keep crushing it out there. And you're now a member, Mark, of the We Build Great Apartment Communities family of amazing people. So if I can help in any way, man, please reach out.
Yeah, no worries. If anyone's interested, they can learn more at thelandgeek.com.
Awesome, brother. Thank you. Mark, keep crushing, man. Thank you very much.
Thanks, John.
All right. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.